All right, hello everyone. Thanks for attending. It's been a short while since we have this joint webinar between myself and Ms. Maureen McCann. My name is Seewing Yi from the Yi Real Estate Network, and my special guest once again is Maureen McCann with Spartan Invest. In terms of briefly, our company's background, we are physically based here in the San Francisco Bay Area for the past 20 years. And for the past 20 years, we have helped out-of-state investors, regardless of where you live in any part of the country or even the world for that matter, we help you to buy out-of-state turnkey remote sight unseen passive investing, and using a turnkey one-stop shop approach to property management. We have like almost 10 different real estate markets. We help investors to buy investment homes. And again, my special guest, Maureen, her company, Spartan Invest, are one of the top turnkey real estate investment provider in the country, and they cover a wide span of a market, mainly in Alabama, Tennessee, and northern Georgia. So they have a tremendous investment business model methodology and one-stop shop, and they have been providing great service, great cash flow properties, very low cost in up and coming market in that region of the country. So without further ado, Maureen, thank you for your attending once again. Thank you for your time. And our goal in today's webinar is to take a step back and re-educate real estate investors. What's going on? We can dispel all the inaccurate information from the negative news media. We can dispel all the misleading information coming from the YouTube videos about all the doom and gloom, all these negative headlines you've seen out there. We're just gonna become as transparent as possible to give you the pure real estate and economic data so you can become a confident real estate investor, so you can take action in this very opportunistic environment. Is challenging. However, if you digest the information we're going to share with you, you are very inspired to take action and to create real estate wealth for yourself and your family. Am I right, Maureen?
We have lots to talk about today, Seewing. So let's jump in. It's a pleasure to be here. Thank you.
Absolutely. Let's get right to it. So let me share the screen. And here we go. All right. So right now we are seeing in terms of real estate is a high demand. Yes, there has been a little bit of decreased demand due to higher interest rate and people taking a pause from buying at least temporarily. But right now we're moving into the summer season and what have you. But we feel the high demand will continue beyond this year, and we'll talk more about that, especially for millennials. So still very high demand. And we still have very, very low supply of homes, still a historical low, believe it or not. In some credible sources, as you can see, America is short more than 5 million homes, and builders can't make up the difference. So we are seeing huge disparities still, right? We're in the middle of 2022, low supply of homes, still relatively strong demand. And so that's what's happening. All right. And then when will housing inventory return to 1.5 million that we need? Look at this. You know, this year, regardless of what you hear out there in the news, we still have very, very big disparity between supply and demand of homes. It is still a seller's market. And depending on what market you're talking about, by the way, every real estate market is local, is different. So is no such thing as a national real estate market. So every region, every city, every neighborhood for that matter is very, very different. All right. So with that in mind, so the question is, the big $1 million question is that when will housing inventory will equal the demand and supply equilibrium, become a normal market, if you will? Well, not in 2022 for sure. In 2023, the projection is that there will be on the supply side. The supply side is potentially slowly catching up with the demand side for next year, 2023, at the rate of 36%. Then 2024, the supply side of housing will continue to catch up with demand to the tune of almost 38%. So therefore, this is just projection from this credible source here. However, from Zillow price expectation. So not until like 3, 4, 5 years from now, before there's a balanced market of 5 to 6 months of supply versus demand to create a normal market. So what does that mean? That means based on projections, the housing prices nationwide should have a positive increase. Some say 5% appreciation rate for the rest of this year. Some say 7%, some say 8%. Bear in mind that that's what's happening, right? So the people who take action this year, they will expect to receive, obtain higher housing price increase, right? And then because the home affordability is at a 40-year low, this means that more and more primary home buyers are being priced out of the market because of skyrocketing home price increases in the past couple of years. As a result, many people are staying off the sideline. Many primary home buyers cannot qualify to buy more due to a higher interest rate, and they have to rent because there are so many people renting. There are bidding wars for renters in many markets in the U.S. And I'm just giving you a sample. For example, in the Sun Belt in Florida, for example, and in Texas, there are some massive rental increases. Look at 55% from the last year to this year, and 32%. I mean, just triple-digit, double-digit rental rate increases. And that will bode well for risk investors because they will get more cash flow, even though currently the cash flow may not be as high as we would like. So we will talk about that. All right. And speaking of skyrocketing home prices, here are the top 10 states with home prices increases from the past 12 to 18 months, with Florida leading the charge, then Arizona, then Tennessee and Nevada and a few other places. But coincidentally, Spartan Invest are heavily penetrating the market in Tennessee, in Chattanooga, for example, and that market has achieved double-digit appreciation year over year. So it's a good sign that Maureen and her company, Spartan Invest, are in the right market. So it's an up-and-coming market, Tennessee, and of course Alabama as well. We'll talk more about that later. Right. So again, so many people are freaking out, right? Just because today's rate is anywhere from 5.5% to 6%. People think it's gonna be a crash. It's gonna be a recession. I don't know about that, because even at today's rate of 5.5% to 6%, is still a historical low interest rate. Is that amazing? So people have this recency bias. It's just I know last year it's a historical interest rate like 3%, 3.5%, shot up to all the way to 5.5% to 6%. People are freaking out. But you look at the back in 1980s, the mortgage interest rate were as high as 18%, right? So only in the past 10 to 15 years or so, the interest rate were below 4%. Look at the year 2000, 20 years ago, is like 6 to 7% interest rate. Back in 1990s, 8%. So so we have to look at history in perspective. Again, the rates are still low. If you can see the chart, right? Look at the 1980s, 18% interest rate. Right now is only 5.5% to 6%. So I wouldn't panic if I were you. I wouldn't freak out if I were you. It's just that's what's happening.